Hi everybody, welcome to Christensen Wealth Management. I'm Michael Christensen. Thanks for taking time out of your day to watch this stock market update and industry sector review for the week beginning Monday, June 11th, 2018. Before I jump into the charts and commentary, I would like to begin with the quote of the week. This week's quote is from Zig Ziglar. Zig Ziglar was born November 1926, died November 2012. He was an American author, salesman, and motivational speaker. He wrote over 30 books in his lifetime. His first book, See You at the Top, was rejected 39 times before it was published in 1975. It is still in print today. Zig Ziglar once said, "What you get by achieving your goals is not as important as what you become by achieving your goals." Those are some wise words from Zig Ziglar. Well, we have had some bullishness in the last 5 trading days, so let's go ahead and jump right into the stock market charts, beginning with the Dow Jones Industrial Average. Before I begin, I would like to say the charts you're about to see are 6-month charts from December 10th, 2017 to June 10th, 2018. Beginning with the Dow Jones Industrial Average, you can see that we are in a gentle uptrend here, and we had a nice rally off this 50-day moving average in purple beginning on May 31st. So we went from right there up to here over the last couple weeks. The 5-day moving average in red is nicely above the 20-day moving average in blue, indicating short-term strength, and the blue 20-day moving average is above the purple 50-day moving average, indicating intermediate term strength as well. So things are looking pretty good for the Dow Jones Industrial Average in those time frames. The one thing that gives me some pause is just wondering if we're going to get above this high right here. Let me make that line a little bigger, turn it a different color. There we go. So this was the high of March 9th right here, and you can see that we're just sitting right underneath it as of the recording of this video. So we'll see if we can get through that this week. If it does, that means the Dow may try and pursue its all-time high again from January 26th. But right now it has to get through this hurdle here, and it has to get above that one there. And both of those are going to be pretty strong resistance for the Dow Jones Industrial Average. There is one other thing that I want to point out. I will zoom out a little bit here on this chart. And that is taking a look at the trend of the Dow going back to the election of Donald Trump here. I'm going to draw a trend line for you, and you can see that if we draw a line from here up to where we are right now, there we go, and let me make that line bigger. You can see that beginning with election night, November, we have a touch here about September 6th, 2017. We have a touch here on February 8th, 2018. We have a touch there, a touch there, a touch there, and now we're sitting right underneath it. So the concern is that this red line that I just drew was providing support for the Dow Jones Industrial Average from November 2016 until it broke March of this year, March 21st, 2018. We broke below it, kept hitting it multiple times from underneath, and could never get back above it. That means that that trend line that's about 1.5 years long is currently providing pretty strong resistance, because it hit that line, at least on this chart, 1, 2, 3 times, and we may be hitting it a 4th as we go into this week. So that gives me some concern. If the Dow is going to go higher, it really needs to break above that trend line again and reestablish its uptrend. Right now it's sitting right below very strong resistance. So we'll see where we go in the week ahead, but that's one thing that I'm looking at on this Dow Jones Industrial Average chart. Here's the chart of the S&P 500 stock index, and you can see that the rally looks similar to the Dow. We started here on May 29th and rallied up to here. The 5-day moving average is nicely above the 20-day moving average in blue, indicating short-term strength, and the blue 20-day moving average is well above the 50-day moving average, indicating intermediate term strength as well. So those are two encouraging things for the S&P 500. The only roadblock that I see on this chart is that we're approaching two extreme levels of resistance, and that is these two highs right here, the one from February 26th and from March 9th. So we're about to tag that, and we'll see if the S&P can get through it and pursue its all-time high level from back here on January 26th. The other thing that I will point out that I just pointed out on the Dow Jones Industrial Average is I will zoom out and show you what its trend line has been since the election of Donald Trump here, November 2016. You draw a line here from November 4th up to there. You can see that right now the S&P 500 is poking above that line a little bit. We had the bottom from November 3rd. We had a touch here or second point on August 18th. And then we had a failure there, and then a rally up, and then another failure, and a rally up, and then another failure, and then a rally up, and then a close last week above that line. So we'll see if that can hold its trend line, but it's more encouraging than the Dow at this point because it did close last week above the line. And right now, those short and intermediate term strength indicators are also encouraging for the S&P 500. So we'll see where we go in the week ahead. But right now, the sun is looking pretty clear, and the sun is shining on this chart right now. And we'll see where we go through the week ahead. The Federal Reserve has a meeting this week on Tuesday and Wednesday with the press conference for the Fed Chair Jerome Powell on Wednesday afternoon at 2 p.m. Eastern Time. So we'll see if they do in fact go ahead and raise those interest rates, and we'll see what that does to the stock market. Here's a chart of the Nasdaq 100 stock index, and as you can see, it is the strongest index of the three so far. It broke through to new all-time highs last week and hit a top on June 6th. The 5-day moving average in red is well above the 20-day moving average in blue, indicating short-term strength. And the blue 20-day moving average is well above the 50-day moving average in purple, indicating intermediate term strength as well. So things are looking very strong on those moving averages for the Nasdaq 100. And the one thing that I would like to bring to your attention is I am going to switch this to a candlestick chart. Just a reminder for those who are not familiar with this, the candlestick chart represents each day's high, low, open, and closing prices for the Nasdaq 100. And you can see that the prior all-time high for the Nasdaq was right there. And we broke above it on June 6th, fell back below it on June 7th, and closed last week on the 8th below those all-time highs. So that is a price failure where we popped up above it, fell back below it, and couldn't hold that higher price, that higher all-time high price that we made. The other concern for the Nasdaq 100 is the index failed on its trading volume. And right here on March 13th, we made an all-time high with 701 million shares of stock traded on that day. And when we broke to a new all-time high last week on June 6th, we did it with only 552 million shares traded of the Nasdaq 100. So that is not a very strong setup for this particular index. The moving averages look good, but we broke to a new all-time high with 20% less volume of shares being traded, and we couldn't hold that higher price. So that is what I call a failure on price and volume for the weekly, for the week ending last Friday. So we'll just have to see what this week brings for the Nasdaq 100, because that is not a sign of strength when you push to higher highs with 20% less volume. So we'll see if there's a pullback this week as we go into that Wednesday Federal Reserve meeting. And we also have a significant amount of economic data coming out this week as well. Here is the S&P 500 Material Stock Index. I'm bringing this chart back after having not talked about it for a few weeks because it really wasn't doing much of anything. However, last week we had a breakout. We have a high here that I will illustrate by actually switching this back to a candlestick chart. You can see that the high of April 18th lines up perfectly with these two highs of May 21st and May 22nd, and we just couldn't get above that line. It was putting up a serious fight trying to get through that. Well, last week on June 6th, the Material Stock Index broke above that with a wide price spread here, shot up, closed near the highs of the day, had excellent volume for the day, pulled back on June 7th and June 8th, tested the breakout line, which is the red dotted line, twice, tested here and tested here. Both days the price held, and that is a very encouraging sign for the Material Stock Index. So that encouragement, combined with the fact that the 5-day moving average line in red here is above the 20-day moving average in blue, which is a short-term strength confirmation, and the blue 20-day moving average is above the purple 50-day moving average, which is a intermediate term strength confirmation as well. So things are looking very good for the Material Stock Index. Here is a chart of the S&P 500 Information Technology Stock Index, and as you can see, it closed at all-time record highs way up here. The 5-day moving average in red is well above the 20-day moving average in blue, indicating a short-term strength confirmation, and the 20-day moving average in blue is well above the purple 50-day moving average, indicating a short-term, intermediate term strength, that is. This chart looks excellent in many ways. We close the week at highs. Moving averages are all bullish. There is only one thing that I see on here that may be a concern for the week ahead, and that is if I go ahead and draw a trend line over the last few weeks from here up to here, you can see that the high of April 17th lines up perfectly with the high of May 10th, which lines up perfectly with the closing high of June 6th. And the other line that I will draw is from the lows down here of April 25th and up to here. And as you can see, those two lines are converging, and that is called, that could be what is known as a rising bearish wedge pattern. Usually it resolves to the downside, but again, these patterns don't always work. We just need to watch and see if they do. So what I'm going to be watching for over the week ahead is if the Information Technology Stock Index breaks below that lower red trend line there. So if it does, then that would be setting us up for some lower price movements, especially if we get back below the prior all-time high of March 12th. So we'll see. But right now I'm very curious to see if these two converging lines are in fact a bearish rising wedge pattern. This chart is of the S&P 500 Consumer Staples Stock Index, and it may be my favorite chart of the week. if I switch this chart to a candlestick chart, well, before I do that, let me go ahead and say that the 5-day moving average in red, which is this red line right here, is now above the blue 20-day moving average. Just a little bit, but it popped above it back about May 24th and has been trending along with it ever since. But last week we started to pull away from it. So Thursday and Friday, the red 5-day moving average is pulling up and away from the 20-day moving average, indicating what may be the sign of some short-term strength coming on. We do have a short-term strength confirmation, but we hadn't really seen any strength at all if you've been watching my videos over the last month. And the 20-day moving average in blue is still well below the purple 50-day moving average right here. So we still have an intermediate term weakness confirmation on this. What I see though is if I switch this chart over to a candlestick chart, you can see that if you connect the low of February 6th, it lines up with March 23rd and May 2nd and May 3rd perfectly. So you have a very nice trend line there and a trend line up here from January 26th down here to May 16th, May 17th, May 18th, and then also touched it on May 30th. And as of last Thursday, you can see this nice red candlestick here, boom, popped up. And then Friday, boom, popped up again. So we had Thursday and Friday were both beautiful days for the consumer staples stock index. We have now broken above this top red declining trend line, and we closed above the 50-day moving average. So the price as of the close on Friday is above the 50, the 20, and the 5-day moving average. So that is a very good sign for this consumer staples stock index, especially because it's one of my favorite indexes, full of brand name companies that make many of the things that we buy every day. Here's the chart of the Dow Jones Financials Stock Index, and you can see that the financials also had a breakout. This chart looks better when I switch it to a candlestick chart, and you can see if you connect the highs from January 26th to the highs of March 12th and 13th, and the highs here of May 11th. May 22nd, we broke above that last week on Wednesday, the 6th of June, came down, tested it on Thursday, and closed above that line. So we have a nice breakout here for the financials stock index. The only thing is that we currently are not above this high right here. We did not close above the high of May 11th. So I'll keep an eye on that. If we can get above that high of May 11th and start moving higher, that's a very good sign for financials. Right now you can see the red 5-day moving average is above the blue 20-day moving average, and the 20-day in blue is above the purple 50-day. So both of those are short-term and intermediate-term strength signals, and that is a good sign for financials. Here is the chart of the Dow Jones Real Estate Stock Index, and it is still in its, well, it's still in its uptrend that began on May 17th. Broke out above it, above the parallel trend lines here, and started to making some rapid pace to the upside. The 5-day moving average in red here is above the 20-day moving average and accelerating, indicating some short-term increasing strength. And the 20-day moving average in blue is above the purple 50-day moving average, indicating intermediate term strength as well. So right now things are looking good for the real estate stock index, and we'll see where we go in the week ahead. But right now we got a nice solid breakout. Thanks again for watching this market update. I hope you found the charts and information useful. Before you go, please do me a favor and click on the subscribe button on the YouTube channel, and then click the little bell icon next to it so you will be notified whenever additional videos are posted. And then in the summary description of the video, you will find links to the Facebook, LinkedIn, Twitter, and website for Christensen Wealth Management. Please visit those when you have some time and like or follow those pages while you are there. That way, throughout the week, I can communicate with you in a timely manner using social media. And whenever I find it appropriate, I will post another video. But if everything just kind of remains much of the same, I will record another video in about a week's time. So stay tuned. I will keep you abreast of what happens in the week ahead. There will be lots of news, lots of economic data, and a Federal Reserve policy meeting on Thursday and Friday, as I said, on Tuesday and Wednesday, with an announcement on Wednesday afternoon regarding interest rates from Jerome Powell, the Fed chairman. Have a great day. Look forward to talking to you soon. Bye-bye.